BizBeat, the insights you need. I'm Juju. Recently, the U.S. Federal Reserve has been on an aggressive rate hike path, resulting in a strong dollar and a depreciating Chinese yuan. Some Western media have highlighted the negative aspects of the Chinese economy. According to reports from Bloomberg, some financial institutions are even hoping to profit by shorting the currency, betting on the short-term trend of the yuan exchange rate. The People's Bank of China has warned the market not to bet on the one-sided appreciation or depreciation of the yuan or renminbi. The foreign exchange rate policy of a country serves the stability and growth of its economy. It is untenable to judge a country's economy simply based on its currency's exchange rates. Let's take a minute to explore how exchange rate fluctuations affect a country's economy. Take the Chinese yuan as an example. If the yuan strengthens against the US dollar, it usually means that import companies can buy more raw materials with the same amount of money. The disadvantage is that for export companies, the cost of exported products would be higher, which is not good for their international competitiveness. If the appreciation or depreciation of a currency is too rapid, it will have a negative impact on a country's economy. If you recall the Asian financial crisis in 1997, one of the reasons for the outbreak of the crisis is the sharp fluctuations in the foreign exchange market that caused huge losses to affected countries and regions. However, China's central bank has the toolbox to take several measures to keep the yuan exchange rate within a reasonable range. For example, last month, the central bank decided to raise the foreign exchange risk reserve ratio from 0 to 20% to stabilize yuan's exchange rates, which can help combat fluctuations caused by short-term speculation on the Chinese yuan. With the central bank's experience and policies like these, the yuan is not expected to see long-term depreciation. Meanwhile, the central bank hasn't fully applied all of its foreign exchange policy intervention tools, leaving enough space for normal market fluctuations, which is conducive to the internationalization of the Chinese yuan. What's more, if you look at a longer period in the past over 3 years, the Chinese yuan has still appreciated against the major global currencies in general, especially against the British pound and the Japanese yen. The stability of the yuan depends on the healthy economic fundamentals of China. As China's economy develops steadily, and against the backdrop that major global currencies have depreciated significantly against the US dollar, the moderate depreciation of the yuan against the US dollar will help maintain the stability of the effective exchange rate of the Chinese yuan. The devaluation doesn't mean China's economy is all gloomy, and the market would only lose if they bet on one-way fluctuations of the currency.